Hello everyone. Hello guys. Thank you for joining. Welcome to another Exness live stream. Just let me know in the comments if you're first time here or if you're a regular. We do this on a weekly basis, so probably you've seen our previous live briefs. Let me know where you're watching us from, and also let me know if you can hear me well, if you can see me. So we can get started. All right. First up, my name is Antreas Themistokleous. I'm a trading content specialist here at Exness. Today we're gonna be checking on what's happening in the markets, what are the micro data on the economic calendar, what is happening. We have various stuff going on. We have the AI bubble, we have earnings, we have Bitcoin crashing, we have different movements, major movements on various instruments. We're going to be checking what's happening this week. We have the Thanksgiving on Thursday and Black Friday on Friday. So in terms of volatility this week, we might have some thin volatility because it's the US holidays on Thursday and Friday. So we only got today and tomorrow if we're trading stocks, right? Okay. First time from Kenya. Hello to Kenya. All right. Okay. Sorry. Okay, so I think we can start. First up, we're gonna go through the economic calendar. What data do we have for this week? How they might affect different aspects of the markets. And then we're gonna check on charts. Feel free to post your questions in the chat, and I'm gonna address it as we go through. All right. Okay, so what we have this week, not too much data in terms of quantity or quality, if you might, because today we have the Producers Price Index for September. A lot of data that we get from United States is somewhat lagging because of the shutdown. Even the NFP and unemployment data that we got last week was for September, but we're gonna check on how it affected and what the expectations were. Okay, so Producers Price Index is expected to go from negative 0.1% to 0.3%. So why is that important? Because it might affect inflation, because the higher the costs for the producers, usually it rolls down to consumers, so prices go up. So Producers Price Index might have some minor effect on inflation, and in turn inflation might have an effect on the Fed's monetary policy and probabilities of the rate cut or a hold or a hike. We're gonna be checking the FedWatch tool later on. Okay, durable goods orders again for September is expected to decline to 0.2%. On Thursday we have the German consumer confidence, not too much improvement there, and on Friday we have the German preliminary inflation rate. Preliminary means is not the final, it's just an approximation, pretty good approximation most of the times. It's expected to increase from 2.3 to 2.4. So why is German inflation so important? Because the German economy is the biggest economy in Europe, so German inflation data has some effect on the European inflation data, which is due next week. Okay, currently is expected to remain the same, but that's why German inflation is important. If we see any surprise on the figure here for the preliminary inflation in Germany, we might have some changes on the expectations of the European inflation for next week. And also, how does that affect the euro and in turns the euro pair? So it's all connected. German inflation affects European inflation affects euro, and euro affects all of the pairs, including that includes the euro currency. Okay. Also on Friday we have the Canadian GDP growth rate. That's quarterly data. That is for Q3. The annualized is expected to decline to to increase from negative 1.6 to 0.5. So improved GDP growth rate for the third quarter. So that's somewhat bullish news for the Canadian loonie. And also early morning on Sunday, this is mostly for next week, right? Early morning on Sunday, we have the Chinese manufacturing PMI is expected to increase to 49.5, up from the 49 points that it currently is. The important thing here is that it's still expected to remain below the 50 basis points. So and also on Monday we have the rating dog manufacturing. This was used to be called the Caixin. I don't know why they renamed it. Anyway, both are affecting the Chinese manufacturing and manufacturing related instruments like crude oil or silver or copper. So Chinese manufacturing is quite important, but this is for early next week. But we do get this data on this week's calendar because it's before market opens. It's super early in the morning in GMT time. So yeah, it's good to know this data from the previous week because you know how to react on Monday open. All right, this is it for this week. Nothing too great, nothing too important. Yes, we have some bits and pieces here and there, but nothing too major. What's important is what happened last week on first of all the NFP and the unemployment. We had also expectations confirmed on British inflation. What's important here is that the NFP got a big revision to the downside. It used to be 22,000 jobs, but it got revised down to negative 4,000. And also the consensus was to reach the 50,000 jobs. I thought it was quite ambitious, but turns out we got even higher than that, more than double the expectations. The downside of the job report was the unemployment rate. Unemployment was expected to remain at 4.3%, but it kicked up to 4.4. So we have rising unemployment, but more jobs created. So this is what was reflected on the probabilities by the Federal Reserve. Well, if we see here, a week ago it was around 50-50 if it's gonna cut or hold, right? But after the NFP publication on Friday, we have currently 81%. So the consensus was that the Fed might not proceed with another rate cut, and there was a large majority believing that we might not get another rate cut. How that's going to affect gold or Bitcoin. But now, after the publication of the NFP, we are back on track with cutting rate. It's not guaranteed yet. Because we need to see slightly more data and how they affect the probabilities. For example, let me show you here. Next month, early next month we're gonna have where is it? Nah, there is not. There is not a date for the NFP before before the Fed rates, the Fed meeting. Sorry. Okay, so we don't have a date yet. Probably we might get. Usually it's released on the first Friday of every month. So and the Fed's meeting is on the 10th of December. So most probably we're gonna get an NFP. Probably not. We'll see. It's a little bit of a chaos when it comes to macro data from the US because of the US government shutdown was for so long that everything is a little bit not confirmed or as expected. For example, yesterday we had the GDP publication. It got postponed. We need to have the NFP on the first Friday. We don't have a date yet for next month. Inflation data, who knows when we're going to get it. Let me check here. US inflation. Okay, US inflation is scheduled to be released on 18th of December. That's not of great use for interest rate decision or positioning of trades before. We don't have a consensus. We don't have anything. So probably 18th of December might not work as well. But anyway, we need to work with what we have on hand. We have the NFP, the unemployment, and we'll see what's coming up from US. We have manufacturing on Monday. Okay, manufacturing is not that important because its services sector is usually the strong hand for US manufacturing. Not that much. You can see here it's consistently below the 50 basis points. So last time they got to 50 was back in January, which is okay, after Christmas period. Usually it tends to be above the 50, then February, and then from that point on below 50. So manufacturing sector underperforming in the States. Services sector might be the important data, but that's for next week. Let's talk about this week. Okay, so we've seen what's happening with the interest rates. Let me show that again. Probabilities have shifted back to a rate cut. Usually that affects gold to a great extent, and we're gonna be checking later on the chart how's that affecting the different instruments. So yeah, I think we can move on to charts. Yeah, let's go to charts and we're gonna check it as we go along. Okay, so by the way, guys, if you have any specific instrument that you want me to check or give my opinion about or whatever, just text me in the chat and we can go through everything. Obviously, gold is on everybody's radar, but I mean, apart from gold, if you have anything that you want to check, please let me know. All right, so what's happening this week on gold? We have first up. Let me go through what's happening with the dollar index, and then go through the different instrument. Okay, so we had the medium term, so not a medium term, it's a short term high here for the dollar index. Actually, let me show the area on the chart here. Around the 100, usually the price tends to test that level and then it corrects to the downside, and we can also draw it all the way back to May. All right, so retest of the 100, correction to the downside, retest, downside, retest, minor downside. So yeah, you can see the pattern. By the way, before we go into the charts, I just want to mention here that anything that I say on trading positions that I might take or that I have is just personal opinion. It's not investment advice. I do not represent Exness on providing you with trading advice or anything like that. That's just my personal opinions, my personal trades that I do on a demo account. So not investment advice. Yeah, you get the idea. All right. So why am I mentioning that? Because if we say that the dollar index might correct to the downside, that means weakening of the dollar. That means that if we see gold, that means that we are expecting a bullish correction or continuation, let's say, to the upside. Bollinger Bands here are quite contracted. That means volatility might be somewhat dried up, right? So we might see some sideways movement before a correction to the upside or continuation to the upside. We see here that the 50-day, the green line here is the 50-day simple moving average, and the price has failed to break below this line for the past 6 or 7 sessions, right? So it's somewhat safe to say that the 50-day is a strong support on the price. Currently, it is testing also the support. In this case, we have bearish candlestick here. So support of the 23.6% of the Fibonacci retracement level, and stochastic is in neutral levels. So personally, what I would do is to see if today's candlestick remains and closes above the 23.6%, which is around 4,100-ish, right? I'm gonna be start building some long trades with targets. First target 4,200, which is the psychological resistance of the round number, right? And also the latest high here in 2 weeks ago, 13th of November. First target 4,200, and then probably if I see that momentum is building up, probably I'm gonna aim for 4,300. The way that I would do that, and again I stress this is a demo account, right? I'm gonna start building some small positioning, right? Going from the 4,100 all the way to 4,150, probably 160, and then aim for those two targets. I understand this is not a big room for profits, right? It's a small target, but that's my top level of comfortableness, right? That I don't want to go above 4,300 because then we're going near the all-time high, which I'm not very keen to test if it's gonna break above. If it's gonna break above, probably we might see that 4,200 is a strong resistance level because of the latest high here, and then we might have some bearish correction to the downside. Who knows? That's why I'm saying I want to see and break above the 23.6 here, and then start building some small positions and start building them higher and higher as I approach to 4,200 with target probably 4,300. That's for the short term. If you're scalping is not really my thing. I don't like scalping, but anyway, if you do, you can drop to lower time frames and check around these areas, 4,200. If you can spot any probably candlestick formations or some patterns forming, and then you can jump in if you don't want to do that from the beginning. Let me see. Check pound USD and pound Japanese. Yeah, we're gonna do that. Hello, Andreas, watching from Nairobi, Kenya. Hello, Joyce. Joyce is a regular here. Hello, Joyce. Just in time for gold. Yeah, hope you catched it. All right. So yeah, that's my take on gold. I really believe in the support of the moving average, the simple moving average. It's been tested multiple times over the past. Let me show you here. Over the past 1, 2, 3, 4, 5 times. So, yeah. Strong, that means we have a strong valid support level, right? All right, but everything is changing, everything is affecting, not everything, but a lot of data affects gold especially, right? Because it's so a popular instrument. We can get macro data affecting it. We might get Trump saying something that nobody expects and everything goes crazy. So yeah, but on a technical perspective, that's what I see. All right, let's move on to crude oil. So sorry. Okay, so what do we see on crude oil? We see that we have a bearish trend forming from late October, and the price has found sufficient support on the lower band of the Bollinger Bands, exactly on the lower band of the Bollinger Bands. It tested it, intraday it went below, but closed above. So quite a strong support here. And it's currently testing the support of the 23.6, which is around the 58.3, 58 area. All right, we might see some intraday retest of the 58 area. So why am I mentioning that? Because 58 was also the previous support level or strong reaction of the price exactly on 58. And you can see here this green rectangle thing, line, not a rectangle, line. All right, around 62. 62, as I mentioned on the previous live breeze, if you guys attended, is a very strong resistance. So in my mind, 62 might be the ceiling of any short-term bullish move, which I don't really expect here because everything points to bearish trend overall. We can see the trend line here is it's bearish. We see the moving averages, this green line, which is the 50-day, is trading well below this blue line, which is the 100-day simple moving average, which that validates the overall bearish trend, right? So stochastic is near the extreme oversold levels, which probably might be hinting to some minor bullish correction in the short term, but I don't expect any significant moves to the upside. You can see here we had bearish correction, big bearish correction on the 12th, then almost recouped the whole losses, quote unquote, in the following week. Then another bearish correction here, three black crows, right, formation, but we don't see strong bullish correction to the upside. What I'm trying to say here is that every time we have big bearish action, we almost immediately have some good percentage of bullish correction to correct, and that's why we have this sort of a range, downward range. But that's what I see for today. We might see after the US market opens, a kick to the upside. I probably, so in that case, we might target the 60 area, which is the psychological resistance of the round number, right? And it's also coexisting with the 38.2 of the daily Fibonacci, weekly Fibonacci retracement level here. So my take on crude oil for now might be just stay out of it, because it's quite risky. Why? Because it might continue to the downside, but we are already too low, right? I mean, also if we take a look at the steel forecast, which is the short-term energy outlook from the U.S. Energy Information Administration, we see that the expectation, let's say, by the end of the year, the blue line here is the forecasted price for crude oil, right? So we can see here that by the end of the year, the price for the forecasted price for crude oil might be around the 55-ish probably. So we are already at 58. 55 was never reached, by the way, throughout the year. Probably intraday on April, but apart from that, nothing. So probably we might not get to 55, but we are already too low. That's why I'm mentioning that. So I'm not very confident into opening some short trades on crude oil. Probably I'm gonna be keeping an eye on it to see if I can spot some good long trade entry point. All right. Okay, so that's it on crude oil. Yeah, I don't need to add anything more. And we're going to the hot potato of the week, which is Bitcoin. Everybody's talking about Bitcoin, crash, bull, the bear market is here, end of the world, chaos, blah, blah, blah. All right, let's see what's happening with Bitcoin. Bitcoin is trading exactly on the 78.6 of the Fibonacci retracement level. You see the levels of Fibonacci to the downside. I mentioned it before, I'm mentioning it again, and I'm gonna keep saying it. Cryptos tend to love Fibonacci levels. We see it rebounded exactly on the 50%. We saw support, intraday support on 61.8, and 78.6 is the technical support area for now. So Bitcoin might be having some bullish correction for now, but I want to see the price move down to probably 86 or even slightly lower, probably around the 84,000, for me to be confident enough to initiate some long trades. Why? Because I don't think that the bullish correction that we've seen in the past couple of sessions is yet a reversal. Probably we might get a dead cat bounce. That means that after some strong bearish move, we see a big upside, and we think, this is a reversal, it's all over, let's buy, let's sell the house and buy Bitcoin, I don't know. And then probably a continuation to the downside. So not convinced yet about the bullish correction. We see actually today we have a bearish candlestick forming. So we might see continuation to the downside. Probably we might see some dead cat bounce formation. But even in that case, I think that the 61.8 which is the golden Fibonacci level. Golden because 61.8 is was considered the golden level. That means it's the strongest of the Fibonacci levels. Anyway, even if we see a bullish correction to the upside, probably we might have some strong resistance around the 55,000. Yeah, what I'm trying to say here is that I believe we might see the year-end close and Bitcoin might still be below the 100,000 unless we have some strong catalyst coming into play. We've seen governments forming regulations around crypto. We see adoption by banks. We see more acceptance, but still the price has been in free fall since early October. So that's why I'm not yet convinced that we might see that this bullish correction is indeed a trend reversal. Okay. All right. So let me know, guys, if you want some more instruments analyzed. We're gonna be checking on pound USD and pound yen. Michael, yeah, we're gonna be checking on that. Gold, we've seen that, so yeah, feel free to let me know if you need any other instruments. Okay. I saw some yeah, what fundamentals are driving gold? Okay. Yeah, the first thing that drives gold is obviously the interest rates, right? If we have expectations of rate cuts, then gold goes up. When we have probabilities of the rate hiking, let's say, usually gold goes down. That's why when we have higher interest rates, that means that bond yields are going up, which provide more returns than gold. So that's one factor that affects gold, mainly because differences or fluctuations in interest rates directly affect the dollar index, which in turn affects the dollar, which in turn affects gold, crude oil, anything that is valued in US dollar. We also have physical demand. When, let's say, we have tensions or uncertainty in the market, people tend to buy gold because major conflict usually affect negatively the currency. So people run to gold to safeguard the buying power of their capital, right? And also periods of festivities, especially in India, because Indian market is one of the biggest consumers of gold, if we can call them that. And also central banks buying into gold also affect demand, therefore pushing the price to the upside. So it's a lot of stuff or a lot of elements that affect gold. All right, so let's check on pound USD. Yeah. All right. Let me fix a little bit. my levels here. All right. So pound USD, I have been expecting, not expecting is a strong word, anticipating the 1.30 area to be triggered for quite some time now. You see, I have it already drawn on my charts, right? So it was triggered in early November, yeah. We have, that's exactly by accident. That's exactly what I was talking about Bitcoin. We see, let's say this is Bitcoin chart, we see a big bearish trend. And then for Bitcoin chart, we're around here, right? But this can happen. Just the price continue moving up and then just come back down to exactly square one, right? So as on, I'm gonna come back on pound USD. We're right here. So there's nothing telling us that the price cannot just move to the upside. Probably that's why I mentioned 61.8 and then correct exactly where it was, right? Exactly what we see on pound USD. Big bearish move, correction to the upside, and then back down to where we were before the initiation of the move. Now, what I see on pound USD, currently the price is trying to break above the 23.6. Taking into consideration what happened in the previous couple of weeks here, I wouldn't be too intrigued to open long positions unless I see a penetration of the 38.2. I mean, crossing of the 38.2 to the upside. If that happens, which is quite possible, if we take into consideration that the dollar index might hit the strong resistance and goes down, that means that dollar goes down, where in this case pound goes up, right? If we follow that that logic and expect the dollar might go down, if you are risky enough, you can start building your positions from now, with first target 131, second target 132. Or if you want validation, personally, that's what I would do, is to wait for validation across over the 38.2. I might miss this small area of profit, but usually that's what I'm doing. I find, for example, if I was going to take this trade, I would put a pending order exactly above the 38.2, which is the 132, probably somewhere higher than 132. So that I don't get triggered and then reverse to the downside, probably around 132, 100 or 150, and then wait for the price to move to the upside. That's what I would do. But if you're risky enough, you can start building your trades from now. But there's nothing saying that the price might not retest the 38.2 again and come back down. That's why I would open my position slightly above 132, 150. All right. Yeah. Okay. And pound yen. Pound yen actually. This is what trade I have open running here. This is a demo account, of course, but this is a trade that I took 21st. Yeah, it was late last week. I was expecting the price. You see again the green lines here, thick lines, are resistance levels, and I was expecting the price to hit, not expecting, I was waiting for the price to hit to 207 and then start building. I actually had a pending order for 207, a short sale on 207, it reached to 206.89. It never went to 207, so my trade was never triggered, right? And then I got frustrated and I started selling at what was the level? I opened the price 205. Not frustrated, but I was expecting it so firm believer that it's gonna reach 207 and then correct, but it reached 206.89. So yeah, you get that point. But anyway, and then I saw that on the 21st, and I opened some short position. Why am I mentioning that? Because okay, it's a small amount, it's a demo account. I understand that, but same goes if it was a real account. I opened the short position at 205, around 205, right? It went a little bit into profit, let's say intraday, but then it corrected to the upside and it's correcting to the downside. That's why I'm keeping my position open, because it's very near to where I opened it. So my analysis might still be correct, right? Now, if it crosses 206, obviously I'm gonna close it, especially if it remains above 206. But I was a strong believer that we will see a strong correction phase to the downside. But anyway, what we can do now is we can draw our Fibonacci levels at exactly the last swing, which is quite a strong swing, right? And as I mentioned every single time that I see these setups, when I have a strong trend, I draw my Fibonacci from lower to higher. I like to include the intraday, the whipsaws here, the wicks, right? Not just the body of the candlestick. I also like to include the whips because it's also data, intraday data that took place, and then wait for 38.2 to be tested. And that's why I wanted the 207, because it gave me more room for profit, right? Anyway, if it goes down, I'm gonna take from 205 to 203. I would take from 207 to 203. Didn't trigger, but it is what it is. All right. Okay, I don't see any other instruments that you guys want to check. So let's just leave it at this. We can. What else do we can see here? Why do I have Lily open? Yeah, it was an all-time high. It's just an individual stock that I like to keep track of. It's in the healthcare industry. So yeah. Okay, so what I wanted to mention also before we close is that you can follow Exness on different social media, YouTube, X. You just go on X, search for Exness, and you'll have. We are quite active, right? Let me show you the account there. You can get pieces of data throughout the day. We post various charts with a small explanation of what's happening or description. You can interact with us. You can post your questions. You can do basically anything you want, right? And also on our YouTube channel, if you go on YouTube and search Exness, you will find our channel. Please give us a like and subscribe, right? But you can also click on playlists here and watch different types of videos that we do. First up, it's our podcast. where we analyze different concepts of trading, anything that has to do with trading. You can watch your videos, you can leave comments on what you want to watch next. You can also watch our playlist of the market outlook, because we give trading ideas every single week. And what I mean by trading ideas is, for example, last week's we have pound Swiss franc to rebound to 0.81. This video was 5 days ago, which was around the 20th. Let's check on what happened. This was one of my ideas, by the way. 20th, yeah, we were around the 179-ish area, and the target was 0.81. It's not triggered yet, but we are, I don't know, probably it's gonna be triggered throughout this day, throughout today. So yeah, that was one of the trading ideas that we gave. So if you were trading and you follow Exness and watch our weekly videos on trading ideas, you might get an idea for a trade for the week, right? We do that every single week. So every week you have one idea for a trade with targets, with explanation behind it, with technical analysis, with fundamental analysis. So that's an idea for a trade, right? And we have pretty decent success rate, right? So it's not just the video, it's ideas, weekly ideas that they work more times that they are not. All right. Okay. You can also follow my personal account on Exness. Not personal, but yeah. Yeah, that's my profile. Yeah, I have a quite strong surname, but all right, it is what it is. Okay. Why to follow me? I post every single Monday my ideas or my analysis on crude oil and gold every single Monday. Unless I'm on leave, I do it on every single Monday. If I'm on leave, I do it on Tuesday. I still do, right? And I post it on my X account, or you can follow me on TradingView. If you are, I also post actually my ideas on TradingView, and I also share them on Exness, on X. Sorry. So yeah, this is my account on TradingView. You can see quite steadily gold oil every single week, every single Monday. All right. Sometimes I do individual stocks if there's something important like Adobe or Oracle or Apple, Microsoft. Yeah, whatever is trending in stocks, I do my analysis, but mostly is crude oil and gold. Okay. So yeah, I think that's it. We don't have too much data to comment on. We can sit here and watch and analyze all the pairs, but yeah, we just need to be somewhat selective to the most popular ones, or if you guys have anything else that you want to check. So yeah. Let me know, guys, if in the comments, is this your first time watching us? Is this Eric Kering viewer? I'm pretty curious to see who's here for the first time. Feel free to let me know in the comments. All right. So yeah, I think that's it for this week. We've seen all the accounts, we've seen the majority of instruments, we've seen Bitcoin, gold, crude oil, different forex pairs. Yep. So I think that's it. Thank you everyone for joining us. We will be doing this same time next week. My colleague Michael is gonna be hosting the next live brief. Hope you learned something or found my different perspective somewhat interesting. So yeah, thank you all for joining, and hopefully we'll see you all next week, same time here at our channel. Thank you guys.